Mastering real estate investment requires a blend of education, practical experience, and strategic planning. Here are key steps to help you become a successful real estate investor. Educate yourself. Read books and articles. Start with foundational books like Rich Dad, Poor Dad by Robert Kiyosaki and The Millionaire Real Estate Investor by Gary Keller. Follow real estate blogs and news sites to stay updated on market trends and strategies. Take courses. Enroll in online courses or attend workshops and seminars on real estate investing. Consider getting a real estate license to deepen your understanding of the industry. Join real estate investment groups, network with experienced investors through local real estate investment clubs or online forums. Attend industry conferences and meetups to build connections and learn from others. Understand the market. Research market conditions, study local market trends, property values, and rental rates. Analyze the economic factors affecting real estate in your target area, such as employment rates, population growth, and infrastructure developments. Identify the right locations. Focus on areas with strong economic growth, good schools, and low crime rates. Look for emerging neighborhoods with potential for appreciation. Develop a strategy. Set clear goals. Define your investment goals, whether they are focused on cash flow, appreciation, or a combination of both. Determine your risk tolerance and investment timeline. Choose an investment strategy. Decide whether you want to invest in residential, commercial, or industrial properties. Consider different investment approaches, such as buy and hold, flipping, wholesaling, or rental properties. Financial preparation is key. First, secure financing. Assess your financial situation and establish a budget for your investments. Explore financing options such as traditional mortgages, hard money loans, or partnerships. Next, build a reserve fund. Set aside funds for unexpected expenses, such as repairs, vacancies, and maintenance. And don't forget to understand tax implications. Learn about the tax benefits of real estate investing, such as depreciation, mortgage interest deductions, and 1031 exchanges. Consult with a tax advisor to optimize your tax strategy. Start small. Begin with single-family homes. Single-family homes are a good starting point for new investors due to their lower cost and simpler management compared to multifamily or commercial properties. Also, consider house hacking. Live in one unit of a multi-unit property while renting out the others to offset your mortgage and build equity. Conduct due diligence. Perform thorough inspections. Hire professional inspectors to assess the condition of the property and identify any potential issues. Evaluate the property's financials, including past rental income, expenses, and projected cash flow. Finally, analyze comparable properties. Compare similar properties in the area to ensure you are paying a fair price and understand the potential rental income. Manage your properties effectively. Develop a management plan. Decide whether to manage the properties yourself or hire a property management company. Create systems for tenant screening, rent collection, maintenance and repairs. Maintain good tenant relations. Communicate clearly and promptly with tenants. Address maintenance issues quickly to keep tenants satisfied and reduce turnover. Continuously improve and adapt. Monitor your investments. Regularly review the performance of your properties and make adjustments as needed. Keep track of key metrics such as cash flow, occupancy rates, and return on investment. Stay informed. Continuously educate yourself on new trends, strategies, and regulations in the real estate market. Adapt your strategy based on changes in the market and your personal goals. Leverage technology. Use real estate software. Utilize property management software to streamline operations and keep track of finances. Use online tools for market analysis, property valuation, and tenant screening. Scale your portfolio. Expand gradually. Reinvest your profits into additional properties. Consider diversifying your portfolio by investing in different types of properties or markets. Form partnerships. Collaborate with other investors to pool resources and share risks. Join investment syndicates or real estate crowdfunding platforms to access larger deals. Mastering real estate investment requires a combination of education, strategic planning, and practical experience. By following these steps and continuously learning and adapting, you can build a successful and profitable real estate investment portfolio. Remember, patience and persistence are key to long-term success in real estate investing.